Hey, it's Brian Mudd. This is my cheat sheet for Wednesday, June 20th. Okay, so I've got another couple decent housing stories. The tale of two economies playing out. Right now we have the overall economy decelerating, slowing down, but housing is the one thing that really is doing quite well right now. Come back to that. First, let's do the twist. I'm not going to try to dance. This is the whole thing with the Federal Reserve. You probably heard in the news. You might have seen the stock market go up yesterday, and you're wondering what's really going on with the Federal Reserve. All right, let me just try and make sense of this real quick. There are three possible outcomes. Printing more money, known as quantitative easing, and this is where they create more money at the Federal Reserve to buy our own debt back. We are now the largest holder of our own debt. Go figure that. China's the second largest holder. Anyway. That's what ends up watering down the dollar in your pocket and costing, and having things like oil and gas and other commodities cost more. The other is Operation Twist. That's what I think will happen, and they also could do nothing. So what the Federal Reserve is going to announce today is Operation Twist. And what this will end up meaning is that they are going to basically trade games. As the Federal Reserve has investments, our money, stored with certain types of bond programs to keep interest rates artificially low. Sometimes they'll hold short-term loan products, bonds, mortgages, and sometimes they'll hold longer-term. What they're likely to do is continuing to sell shorter-term debt to buy longer-term mortgage debt to keep interest rates lower for a longer period of time. Sound a little convoluted? It is. The net effect of it is it won't accomplish a whole lot because interest rates are already really low, and people anticipate interest rates being really low for a while going forward. So you're likely to see the financial markets unhappy with the outcome today, and it really doesn't mean a whole lot to your wallet, which is good because at least they're not going to be printing more money. Housing. Couple good things here. The return of the first-time home buyer. In healthy economic times, we see that 40% of all home purchases are from first-time home buyers. We have seen the highest percentage without an incentive, without the first-time home buyer tax credit that we have seen since before the housing downturn. 35% of all home buyers right now are first-timers. So we're almost back to those healthier levels. And that's significant because we're seeing an increase year over year in sales, double-digit percentages, which means it is more and more people that are willing to step up and take the risk. Of course, first-time home buyers tend to be those with that are on the younger end, with a little bit less saved, a little bit less established in their career, and that they're stepping up and taking advantage of these record low mortgage rates along with super affordability is a really good sign, I think, for them, because I think housing, if you're going to be in a place for a while, is a really good place to be right now, but also for the overall housing economy, which, by the way, cash is king, because here's the next step. 33% of all home purchases right now are cash buyers. That compares to 10% on average historically, or 330% more. It's a staggering number. And where you see the most desirable markets, you see more cash. Palm Beach County, 69% of all sales in Palm Beach County are cash deals, cash buyers. And you take a look at the Treasure Coast, the number is just over 50%. These are huge numbers. So what it shows you is that the investors are getting involved at these levels, first-time home buyers are getting involved at these levels, and the bottom line is if you're going to be in place for a minimum of 3 years, I think you should be involved in housing too at these prices. And if you were part of the housing bust and you got hurt, well, you might be surprised. 2 years after a short sale or a foreclosure, as long as you're making money and doing everything else right, the odds are you could even get a mortgage loan if you so choose. And a lot more on the physical cheat sheet today. I invite you to go check it out, including, before you take your summer vacation, what you need to know about rental car policy changes. They'll ding you for dings in their car. Check out the physical cheat sheet. Enjoy your day. We'll see you tomorrow.